Hello and welcome to today's morning report on Thursday the 3rd of March with me, Richard Perry, market analyst at Hantec Markets. European trading sessions got off to a slightly cautious and negative start, just slightly lower, about 0.3, 0.4% on the European indices. There's sort of a bit of a cautious nature that has sort of drifted into trading this morning. That's come with the oil price just slightly lower, nothing too significant. And markets are just consolidating these gains that they've seen over the last few days. Now, what we have got in this chart, let me just show you the oil price, is this breakout. It just happened on an intraday basis yesterday. 34.80 was that key January high. We broke above that. We haven't closed above it, so it's not quite confirmed the base pattern yet, the big double bottom. But look at this downtrend broken. 21th month downtrend, that's basically been intact since the market started falling away all those months ago. So we're now beginning to see a real turnaround, real traction to the upside. That uptrend on the oil price is still continuing. And this sort of reflects this improvement that we've had in commodities, really. Brent crude has made a similar breakout. 36.25 was that breakout, and that's been made as well. But it's the copper price also that I really like. That has broken out, or based out, let's just say that. And it looks like all these charts are beginning to improve, aren't they? The US 10-year Treasury yield, which is a signal for sort of growth expectations, really, is turned around in the last few days again, strongly higher. It's looking to move higher, and also the 2-year yield continues to move higher. That suggests dollar strength, and that's what we've had in the last couple of weeks. Dollar strength just slightly consolidating today, but nothing too significant. The euro is flat today. But the other thing I want to point out was this sort of Chinese yuan, which has just last few days really just been flat, interestingly as well. So that is again just sort of that's a help to risk appetite. The fact that it's not weakening significantly. And what we've seen. Oh, sorry. And let me just get that back. And what we've seen is forex markets basically just consolidating today. Nothing too really significant either way. But the yen continues to weaken. I'll talk about that in my charts appraisals in a bit. The Aussie dollar broke out yesterday, so that's a key mover and something to watch. But generally speaking, forex trading has been rather sort of quiet today so far. Now, what we've got to look forward to today in terms of economic data, well, we've got the PMIs, the service sector PMIs continues to come through. These are the big concern, possibly that's the reason why possibly the market is just a little bit cautious today. Not from the UK data, that's at 9:30. That's the first sort of market mover for the UK side. 55.1 is the expectation there, so just basically just slightly lower from last month, but not too significantly. And then into the afternoon we get the US data, and that's when we get the ISM non-manufacturing data at 3 o'clock, and that could be the concern because it's expected to come in at 53.2. Now, on the surface of it, you'd say, okay, well, that would be 4 months in a row lower, but nothing too major. But the market service sector PMI, which is a private data company, that suggested the service sector PMI falling below 50. So is this possibly going to be a number that scuppers this rally? It could be. So watch out for that at 3 o'clock. Prior to that, you've got the weekly jobless claims at 1:30. Again, 271 expected there, so no real great shakes from that number. The factory orders are expected to come in at plus 2% on the month-on-month data. Now that would continue to improve the trend, which has been sort of increasing over the last sort of 4 months now. So that would be an interesting number, and I think that could be something also that the market will focus on. But certainly I think today the main driver will be this ISM non-manufacturing data this afternoon at 3 o'clock. So that takes me on to my chart today. You briefly saw it earlier. Let's show it properly now. That is silver. And now, silver. Anyone who's been following my gold analysis will know that gold sort of is trending higher, but I'm worried about the momentum indicators. Now, silver, you've got that same worry on the momentum indicators, more extended on the downside in terms of the corrective element to these momentum, but you've seen also the silver price topping out. That you could argue is a head and shoulders top pattern, which gives you a downside target of around about 14, I think it's 1420. Now we've had a move down to 1457 already, which rebounded. So already we've seen a move back to that. Interestingly, bang on the 61.8% fib level. But we've now got this developed downtrend channel in silver, so that would suggest selling rallies, and that is sort of consistent with what we've got on these momentum indicators as well. This sort of consistent selling rallies. We've had a rebound to the neckline. That neckline came in around 1506. 1507 was the rally high on Tuesday before falling over again. And just that would suggest sort of again selling into these rallies on silver, and the reason that I'm concerned about silver, and I'm actually going on Tip TV later to talk about this, is this gold-silver ratio. Gold-silver ratio is gold divided by silver, simple, and look at the historic level. Every time it gets towards 80, it seems to be rather extreme. Between 80 and 85 seems to be very extreme. And that tends to be where you start to get gold correcting relative to silver. Silver doesn't look as though it's going to be about to rally, does it? So what implications does that have for gold? Anyway, so I wish you good luck in your trading on silver today. Don't forget this ISM non-manufacturing data, which, sorry, that's the wrong chart, isn't it? Let's go hourly silver. And you can see here, just once more, that pullback to the neckline, just failing again. Momentum indicators bearishly configured, falling moving averages. So selling rallies on silver looks to be the way to play it, and it looks to be, I think, for it to retest that 1457 level. So I wish you good luck in your trading on silver today, and I will speak to you later. I think.